This is not financial advice. I'm recording my thoughts about Adobe. A lot of us have used Adobe's products and a lot of us love their products. Ever since they switched to a subscription model, they have become an extremely profitable company. Its stock is currently trading at about $362 with a market cap of about $171 billion. When I look into the past 12 months, their revenue is about $16 billion, which represents the price to sales of about 10, which is slightly expensive. But when I look into the net income, they made about $5 billion. This represents the price to earnings of about 35, which is expensive. So let's look at how this business is doing. When I look into the past 3 years, they grew their revenue between 15 to 20% year on year, which is a good growth for a company of this size. But when I look into the past few quarters, they were growing at about 20%, but in the most recent quarter, the revenue growth was only 9%. So obviously the investors have panicked that the growth rate suddenly fell from 20% to single digits, right? But the management is saying that in the coming few years, they are positive that they can grow their revenue at mid-teens. So mid-teens percentage is about 15 to 16%, right? That is in the next few years. And they're saying that they're planning to achieve about 30 billion in 2026, and they are on their way to $45 billion revenue in the coming years, but they did not tell us when they are planning to achieve that kind of revenue. When it comes to the number of outstanding stocks, currently they have about 477 million stocks, but in the previous few years they had about 480 to 490 million stocks. So they are buying back their stock a little bit here and there. So there is no stock dilution, which is a great news. So now let's get to the question of whether I can buy this stock at this $362 price in order to make a profit in the coming few years. So for this evaluation, I'm going to look for a 5-year horizon until 2027. Since the management said they are going to grow in the mid-teens, I'm going to assume a 15% growth rate in revenue for the next 5 years. Since they made $16 billion of revenue this year, if I apply a 15% growth for the next 5 years, they would make about $32 billion of revenue. So when I look into their gross margins, they have achieved almost 90% gross margins and about 40 to 45% operating margin. So I can assume a 35% net profit margin for this kind of company. So that's going to yield about $11.2 billion of net income in 2027. Since this company is growing in the teens and has very good net profit margins, I can assign a multiple of 25 because that's fair for this kind of company. So that's going to yield about $280 billion of market cap for this company in 2027, which converts to a $592 stock price. But wait, the stock is now at $360, right? So that's about 64% gain in 5 years. If I invest in SPY or VOO, I will simply get about 10% a year. So that's about 50% growth, right? So I will definitely beat the index if I buy Adobe at about $362. So that is the actual evaluation. That's the fair price evaluation. Since this is a popular stock, if the management executes pretty well, the investors can pay a premium multiple of about 30 because we cannot change the revenue or net income here because the management is giving a projection of the revenue as well as net income, right? So the only thing that investors can change is the multiple. They will pay up for the company if the company is executing and going in the right direction, right? So if I assume a multiple of 30, this company will be worth about $336 billion or $711 in 2027. So that's almost 2x in 5 years, which is a great return for this company. So at the moment, I'm comfortable investing in this stock. Doesn't mean I'm buying this stock yet. I'm just accumulating cash and waiting for a crash, right? So a 2x reward for a quality company like Adobe is a really good deal. So gone are the days where we can do 2x or 3x our money in few months, right? That's 2020, 2021. Those days are over. So even if we achieve a 10% plus growth rate year on year, that's a win.